Saurabh Vidyadhar Gadgil, as I said, the CMD of the company joins in right now to talk about the quarter. Saurabh, two ways to, a glass. How do you view the quarter? Glass half full or glass half empty? Because it's a good quarter. Profit after tax numbers look very solid. Festive season has contributed. But when I look at the growth numbers, and correct me if I'm wrong here, of what you did in quarter 2 in terms of growth versus what you've done in quarter 3, the pace of uptick just petered down a little bit.
Good morning. See, rightly said that Q3 is the biggest quarter for the entire jewelry industry, and Q3 sees a huge uptake both in terms of jewelry as well as bullion. What really helped Q2 this year was the dip in the import duty cut. So we saw July as a mini Diwali this year. That is why the Q2 numbers were very good in this financial year. But having said that, was Q3 results good? I think I'm more than satisfied considering the high prices, considering the demand which we had foreseen in June, July, and which could have taken a toll on the Diwali demand, but that has not taken place. In fact, the month of October itself, we crossed more than 1,000 crores of revenue, which was the first time in the history of the company. So we are definitely satisfied, pleased with this entire performance. And like you said, all the matrices have shown a positive improvement, and we have been able to attract more footfalls. Our number of convergence ratio has remained constant in spite of the high gold prices, and that has reinforced the faith of the consumers in the company and in its jewelry designs.
Okay, Saurabh, the question therefore would be that what lies ahead now. I remember at the end of or the beginning of the festive season, everybody mentioned about how this period until May is likely to be the period with the highest wedding dates, and therefore business for jewelry companies will look rock solid, etc. Is it turning out that way? Are you sensing that in quarter 4 as well, and could it translate into better revenues even in quarter 1 FY26?
Q4 is typically a quarter when you have the wedding season going on. So Jan, Feb, and a part of March will have weddings, which will add big ticket items to the sale booty. Along with that, this year also in Maharashtra, Gudi Padwa is falling in March, so that's going to be a big shopping day. And coupled with the bullishness in the gold prices, where consumers are looking at entering the gold market right now, I think Q4 should be a good quarter. We are not seeing any major concerns on that front. Diamond sales have been strong even in Q4, and as we have seen that the studded mix at our company is showing a very healthy increase. Our Polki jewelry segment, which we launched in Q2, has really showing signs of a good sales, and that's another category which we are very bullish on, because that's going to be a category which will really enable us to take the studded ratio, as we had said, more to upwards of 10-11%.
Okay, so studded is something which you're betting big on, but do you think, is there any possibility of the man-made diamonds to come in and restrict your play in the studded segment? I know it's a bigger stone when you talk about man-made diamonds, but what is your exposure, and how are you, are you planning to probably even introduce this kind of a category then?
Firstly, there's been no demand from consumers for lab-grown diamonds at any of our stores. So people primarily who come to us are serious jewelry shoppers, who are value shoppers, and who look at jewelry also as an investment. So that really has not been an area which we have seen demand on. Secondly, most of the jewelry chains which sell diamond jewelry are selling diamonds which are in the size of less than 10-11 cents. So this is not a category which really lab-grown has taken on. Sizes which are like 30-40 pointers above and solitaires is where lab-growns could make a price impact in terms of the price differential. So we don't see any real impact on lab-grown diamonds affecting our diamond sales. In fact, we have seen positive growth and steady growth in a natural diamond category, and we'll continue to focus on that.
Okay. And overall, with regards to your revenue per store, on an average, I think from 100 odd crores, you've gone up to around 127. What's that trajectory looking like going ahead, and what's the translation that you will see in terms of the top line? Because we're talking about a 23% growth this quarter. As Neeraj pointed out, Q3 was stronger. So what is that number for FY25, and how are you going to enter FY26?
As of now, we're just in the mid of February, so it's very difficult to comment on the entire numbers. But I think we'll be close to a target which we had, mentioned that around 7,500 to 8,000 would be the top line for the financial year ended 2025. Secondly, like you mentioned, the sales per store has seen uptake. There have been two reasons for it. Primarily, we have seen same store growth of more than 26%. So that has been one factor where we have seen even growth in volumes. And second has been also the increase in prices post July. So that has also aided the same store growth and also aided the revenue per store. But as a company, we really thrive on this model of not going very aggressive on big store sizes. So that has helped us to keep a healthy, revenue per store, and also a very, very positive and a healthy revenue per square feet, which is upward of 6 lakh rupees a square feet at our company.
I wonder what is the outlook with regards to costs and liquidity. The RBI has done enough to ease that, so that shouldn't be a problem. But are costs moving up for you, and will you be able to therefore manage this uptick in margins that you've shown in Q3, or is it difficult to call that?
See, costs have not seen a significant surge. If you look at our expansion, primary was in Q3 when we launched 9 stores in the Navratri. So that has added to the HR cost and to the direct cost. But beyond that, the costs have not seen any significant surge. Our finance costs have gone down because we have repaid almost all our debt. Today we are 100% hedged, so that has really helped us to keep the cost in control and also to be risk averse. So I don't see any real threat in terms of cost increase in Q4.
Okay, Saurabh, 53 number is what you have in mind in terms of store count by the fourth quarter of FY25. Are you on track to achieve that? And if so, any additional capex that you will require?
Sort of 53, we already done 2 stores in January, so we are already at 50 right now. 3 more stores are being planned in the month of March, which are already almost to nearing completion. So 53 is a number which definitely is achievable, which will be done by us. So in terms of capex, also it has already been absorbed, so there isn't any further surprises on this front.
Right. So no surprises in terms of store openings as well. Thank you, Saurabh, so much for joining us on the show and sharing the outlook going ahead.